Hello, everybody. Welcome to Friday. The S&P 500 was up 0.74% today. It was really unbelievable day altogether with how things played out. All week long, we've been waiting for this jobs report to come out on Friday. And I talked about this on Go Live with Tom, and I really want to repeat it because I think it's very fascinating what happened today. And it really, I think, helps you understand, what happens in the market and how the market thinks. And it's not the same way that you and I might think about some of these things. So jobs supposed to be a million new jobs in April. That was the expectations. We had roughly that last month, and so that looked good. And then Monday, Tuesday, Wednesday, hearing all kinds of rumors and articles about how it could be a lot higher, 1.5 million, 2 million jobs, et cetera. And so all of a sudden it gets reported this morning 266,000 jobs, which is the biggest miss versus expectations since 1998. And so obviously the the analysts are having a hard time on both sides. Most of the times the analysts have been too conservative. We've had lots of earnings that have been a lot higher, and now we have new jobs that is lower. And actually the unemployment rate went from 6% and it dropped down to 6.1%, which is not great. Yet the market took off. The Dow was up, the S&P was up, the Nasdaq was up, the small caps were up. Matter of fact, all 15 pieces of our stock model, both in the ESG and the traditional, were all up, and at least positive. And lots of them were up more than the S&P 500 too, which is really fun. So it was a great day for the portfolios. But why would that happen in a day when the market, the job market wasn't as good as expected? And again, the market is always looking for kind of an even growth. They don't want a very real hot growth, because that creates inflation, makes the Federal Reserve, start raising rates before, the market really wants them to. They don't want, no growth, kind of like we had last year at this time with the pandemic happening. So this in between realm. And so that's what they like. They want the jobs to come, obviously, and not be negative, but not be too high. So it just was like a relief. I'm telling you, most of the conversations and articles that seem to be happening were about it being way over a million. And so, and that was scaring the market. You could see it, especially in kind of the growth and tech areas that don't like inflation as much. And those had a nice rebound today. As far as that goes, so really fascinating. Now, there's some reasons that we're seeing less jobs. It's not particularly because of the fact that there aren't job openings, although there were some layoffs actually due to supply chain shortages. So semiconductors, can't be received, can't build the cars and trucks. 27,000 people are laid off in the automotive industry this last month. So uh, having said that, there's lots of jobs open. They're just having a hard time getting people out. So there's several different pieces that people are pointing to. Some people are saying it's because of the $300 a week that people are getting, for the excess unemployment, and that ends in September. So maybe they're not wanting to come back out of work. You got another group that's saying, hey, there's people are afraid. There's still. I talked about mobility data. And we still have roughly 1 in 5 people in the US that is moving around less than they did back in February of last year. So obviously, if you're nervous about the virus, you're not going to want to go get a job as a waitress or waiter. So that's a piece of it. Another one is that, I read an article saying that roughly half the schools are still teaching online. And so somebody's probably having to stay home with the kids there. And obviously you can't go to work if that's happening. So this all works out actually, and this is probably a temporary blip as far as that goes, and we could get back to kind of a much bigger job growth number for May. We'll see what happens as far as that goes. They have started to increase the wages. Wages went up 0.7%. That's actually the biggest deal of what was reported today to me, because increase in wages is one of the key components of inflation. And so we did see the yield on the bond market come up a little bit, which is an indication that the bond market started to see some potential inflation. I think they were looking at that increase in wage number as part of that. So really, really interesting how this worked out. Great day though. I really enjoyed how well things went in the market. Lots of green. It was a good day. So and I think we might see, a little bit less inflation than people are thinking, because it's not a straight line. It's going to be very difficult for, this whole process to play through. And then when you take into account the global situation, it's going to be a while before I think we really see a real big push there on the inflationary side. So, and that means that the market can continue to maybe do okay here. So let's see how this goes. So anyway, I want to thank everybody so much for coming to Go Live with Tom. Really enjoyed it, and look forward to talking to you on Monday. Thank you.